There's a time to be bullish, there's a time to be bearish, and there's a time to go fishing. And right now, that's what we have to do. We have to go fishing. We've wanted to be short this whole time, but the market continues to be extremely disconnected from the fundamentals. So I think it's better to go fishing and wait for something to change in the market, something unexpected to hit the market, to cause the market to begin a freak out and go down a downward spiral. Just like we've seen on this upside, where a few small things have led to massive movements, the same can be true on the downside. So let's wait until we see something better. Now, that doesn't mean I'm going bullish here. I said I'm fishing. We'll get more into the specifics of the portfolio after, but first, let's talk about the fundamentals, because we want to make sure we've got a full grasp on this, because ultimately the fundamentals win in the end. So the market is rallying quite hard today on Apple earnings. Apple earnings in which they have consecutive quarters of declining revenue and earnings year on year. I don't know if that's ever happened in their history. I saw that this is the lowest growth rate in some 15 years, including the global financial crisis, for FANG by a lot. So that is something to consider, considering we're at the highest multiples for FANG in that time frame, particularly Apple, particularly Microsoft. Important to note. Simply important to know. However, the market can remain irrational longer than we can remain solvent. So let's let it keep doing its thing, and let's keep fishing. Fishing's a great thing. We can have peace, and we can treasure our ability to live to fight another day. And everyone experiences drawdowns. So us shorts, that have had that drawdown, it's nothing we can't reverse. We just got to stay focused and look for the next opportunity, and it's going to come. So let's go fishing. Let's go fishing. Let's talk about the Fed. The Fed caused the market to pull back after the meeting. And then that spillover continued into yesterday, and Apple earnings reversed it all. Today we got the first Fed member speaking since Powell, Bullard, very hawkish member. And he said some dovish things like we're in restrictive territory. That was an acknowledgement that we have gotten rates up to a level. But he said, while interest rates are above 5%, inflation remains very strong throughout the economy. So he also said there's very little progress on inflation. That's a big statement. Very little progress on inflation. Big statement. Huge statement. He also said he was going to consider revising his dot plot forecast in June and September, depending on the way things are playing out. It all depends on the May data, ultimately, or April data that we get in May before that June meeting. But he's not seeing inflation cooling down. And let's not forget, there are several members at higher interest rates. Now, I'm not saying they're going to hike again. What I'm saying is this is the kind of thing that would make the market turn around. And instead of being bearish and trying to get ahead of it and thinking that the fundamentals are going to bend to us, let's fish and wait for the market to begin bending to the fundamentals. That's when we'll come back in and really play this out. So, Bullard is one guy, obviously nothing too crazy, but I looked at the Fed's calendar. They put a tweet out about their calendar for next week. Now, it's possible another Fed member is going to speak sometime next week before this. And obviously, Lisa Cook today spoke but didn't discuss monetary policy because she was speaking at a college graduation. The next Fed member speaking is Waller. Waller is also a hawkish member. Again, let's not forget, the previous dot plot, which Bullard said he may revise, had a member, likely Goolsbee, who didn't want a hike at the last meeting. Goolsbee is the most dovish member. However, the last hike had no dissenting. It was a unanimous vote. And Goolsbee is a voting member. So, if they wanted to signal leaning towards a pause, or if they wanted to signal that there was some debate about whether to hike, whether to pause, what to do, they could have done it by allowing a single dissent to become public. Particularly the dissent that was penciled in on the dot plot. But they didn't do that. Worthy of note in my opinion, but hey, we're fishing. What we're doing now is we're building ammunition, we're building firepower, we're building knowledge and insight, standing on the sidelines for now, letting the market continue doing what it's doing. Fighting the tape has not worked. We have to acknowledge that. Apple's near an all-time high. That's just the way it is. But that doesn't mean it's not going to turn around. All the fundamentals point to the fact that Apple is overvalued. I get it. People want defensive. I get it. Apple is a big company. I get it. The products are good. But they're up over 100% since their pre-COVID level. The pre-COVID level also had relatively low interest rates, had a massively booming economy, and had a growing Apple. Apple's not growing. Their earnings multiple is way higher than it was then. So, in my opinion, it's a pretty expensive stock here with earnings declining and earnings multiples going up. The earnings multiple is higher now than it was in 2021. That was the peak growth. So why are we at the same or at a higher multiple? It doesn't make sense. This is how you value businesses. Obviously, you want to project the cash flow, the future cash flow, the future value of the business. I do that. That is what you do. But you do that to a point, and you need future gains implied in that. And I think you understand where I'm going with that notion. So that is my take on Apple. I think that's a very similar case in several other stocks, but we're not going to fight the tape anymore. There's a time to go be bearish, there's a time to be bullish, and there's a time to go fishing. So how are we fishing? Are we just purely in cash, sitting on the sidelines? Well, that's certainly one way to do it. However, I do think that there are ways in which you can participate in this market and still be fishing. And that's essentially what Warren Buffett does. And Warren Buffett, at the end of last year, had 3 times the S&P 500 allocation to energy stocks. I get it. Energy stocks are having a rough year this year. The price of oil having a rough year this year. The price of oil was well off its peak by the end of last year when that statistic was released, the 14% exposure to energy. And this is Warren Buffett, diversified guy. He's got 14% in one sector. Obviously has a lot of Apple. So different strokes for different folks to some extent. But here is where we're agreeing. He's also buying additional Oxy this year. We know he's essentially trying to take over the company. Oil companies, unlike the rest of the market, are trading at a very attractive valuation earnings. They're also paying huge dividends. So when you buy a company, when you buy a stock, because that's what you're doing when you're buying a stock, you're not buying something that's going to go up necessarily. You're buying a business. When you buy an energy company, you're getting the most bang for your buck in that business. And I get it. EVs are a concerning threat. But we are far from peak oil. The propensity to increase oil production is very low. And peak oil is supposed to occur in 2050 at 36% higher in conservative estimates. So, if people aren't really wanting to invest in new production all that much, and this year we're supposed to have more consumption than production, and we can see that now through inventory releases while the SPR is also being released, I think it's a pretty safe bet. that doesn't mean it's without volatility. Rightfully so, the past week, there has been a pullback in energy. I completely understand it. Banking crisis. People are going to get very nervous about that. I understand that. Possible recession. People are getting very nervous about that. I understand that for the price of oil. OPEC cut completely wiped out. Is it completely wiped out? Let's analyze. That OPEC cut occurred towards the end of March. At the end of March, we were trading the April contract. That cut is being reflected in the May consumption figures. And I get it, we're now trading the June contract. That was a recent rollover. There's a lot of weird stuff happening around the recent rollover in terms of when people need to buy oil to fulfill their needs. My take on it is, I get it, the price action has been a certain way. But the consumption numbers have been there. The production numbers have actually gone down. So I think the picture warrants higher oil prices. Let's let things play out for a couple weeks here. That's what we have to do with energy. These stocks are cheap. They're paying dividends. In many cases, they're increasing dividends or not cutting them, or cutting share buybacks and increasing dividends. In some cases, increasing share buybacks. It's not a sector in cutting mode. This is not a sector that is slashing dividends to preserve capital, slashing share buybacks to preserve capital. I get it. BP did cut share buybacks, but they simultaneously increased dividends. That is a hedging move. They are acknowledging the price has come down. They think their stock might adjust with the price coming down. However, they are simultaneously at record profits because they're not investing in new production in the way they historically do. Let's not forget, oil companies typically always invest in new production. That's no longer the case. Now they are actively trying to return capital to shareholders. Warren Buffett and Charlie Munger, they know this. Charlie Munger says oil is going to be around for 100 years plus, and that we shouldn't even be drilling it out of the ground. We should be buying it from Saudi at whatever price they will sell it to us. That's what Charlie Munger says. So these companies that produce, quote, liquid gold, in Charlie Munger's terms, shouldn't even exist from a national security perspective. We should just buy the product at whatever price Saudi wants to charge for it. So, and keep it in the ground. In my opinion, these companies offer tremendous value. Yes, they might be volatile in the short term. That is entirely possible. But I like them. They pay good dividends. They are cheap. They're one of the few places in this market I actually feel comfortable hiding out in, because while Apple might deliver a very good product and they might be a very secure business for the long run, they might contribute a very important aspect to the U.S. economy, they might have a loyal customer base, etc., etc., etc. It's not the same as an energy company down 30%, paying a dividend that hasn't been cut, in my opinion, with an oil price that was manipulated by artificial supply. And I get it, it's possible slowdown might come, but it doesn't seem like a catastrophic situation is going to happen. And OPEC has already done several cuts. We'll see what happens, but I feel comfortable in these areas. I think it's a good place to go fishing for oil in businesses that every second of the day, they're going like this, pumping cash out of the ground, producing a lot of cash, and the price you're paying for the cash you're getting from the business is unlike anything else seen in the stock market. And that's what you're doing when you buy stock. You're buying a stock for the return on cash. However, that's not the only thing I'm doing. There's one other stock that I decided to purchase today, and that is Palantir. And this might go against the grain of everything I've said in the past many videos. Tech stocks, avoid tech stocks, higher rates, etc., etc., etc. This company is cash flow positive. It's a speculative company. It was a SPAC. Not many SPACs are cash flow positive, but this one was. At least I believe it was a SPAC. It went public at $10 a share. which I think means it was a SPAC. But it's possible they IPO'd at $10. I bought it at the IPO, by the way. Palantir is an AI company. That's all they do. They do AI and data analytics for companies, big companies and governments. The U.S. government, they've been involved in the Ukraine war. They do big contracts, big money, $500 million last quarter, $30 million net income. Not a lot of net income, but $500 million in revenue. I don't think they've done any layoffs or any of that kind of stuff. They can, and I expect them to, over time, build that business and be what ChatGPT is to general intelligence and communicating and that kind of thing. Palantir, it seems to me, is going to be like ChatGPT for data and strategy. That is a very good thing. Their management is top notch. Why do I say that? Co-founded by Peter Thiel. If you don't know who that is, co-founder of PayPal with Elon Musk, author of the book 0 to 1, which I've read partially. First investor in Facebook, and yes, co-founder of Palantir Technologies. So I have a relatively small position in this. I also still have some shorts on the table. So I don't have that many options. And the only options I do have that are short related are long term. I've drastically reduced my exposure there. That is what we've done to adjust and make some gains going forward. Energy, sitting in that at very low prices here, the stocks. I don't think oil is going to go to $50 a barrel. I think these companies adequately reflected the pullback. In some instances, ExxonMobil, for example, very difficult situation. That stock is trading near all-time highs, but also at all-time record profits despite the price in oil. They've done drastic spending cuts. They're not investing in production like they have historically. A lot of companies are doing that. So this is a very interesting sector that I think warrants being in. I truly think that. And I understand the objections. I understand the reasons not to be in the sector. The fears around the recession, possible continuation of the sell-off. I understand and acknowledge that. It has not been fun having the stocks that go down. But we've been through this many times before. And we've been through economic scares like this before in the stocks. Omicron. Everyone thought another wave, oil consumption going down, et cetera, et cetera, et cetera. Boom. First day of the year the following year, that ended. Boom year for oil. We've seen this before. It's possible we'll see it again. So that's today's video. And until next time, peace out.